All right. Good evening. You're welcome to this evening's lecture. We'll be
Good evening, sir.
discussing. Come again. Come again.
I'll say good evening, sir.
Yeah. Good evening. Good evening. Good evening. Good evening, Reggie, assistant class prefect. So you are welcome to this evening's lecture on order blocks, a very useful and vital component of things you must know about forests. So let me share the slides. Let's go through it. So it will be in two parts. We'll do the theory part, then we will do the practical part on the chart. So as always, let me remove WhatsApp. WhatsApp has a way of slowing down this computer when I'm doing live lectures. Okay, so let's go ahead. So I hope, anyway, Philip said he's driving. Reggie, can you see my screen?
Yeah, I can see them. I can see your screen carefully.
Okay. So as I said, we're going to talk about order blocks, and it's going to be in two parts. So we'll do the theory, then we'll go to the charts, and I'll demonstrate practically what order blocks are. Okay. So this is model 8, and we are going to focus on order blocks. It's one of the most powerful tools for identify the footprints of the institutional big players on the forex market. And once we learn
Okay.
how to spot a valid order block, we will be able to anticipate price reaction with far greater accuracy. So by the end of this section, you should be able to define what an order block is, or tell us what an order block is. Identify what makes a valid order block. Understand how institutions use them to take trades, and we'll use order blocks for entry, exit, in addition with other confluences that are available on the forex concepts. So what is an order block? An order block is a price zone where institutions place large buy or sell orders before a major move happens. So a bullish order block is the last candle before a bullish impulse. A bearish order block is the last candle before a bearish impulse. These zones act as magnets, and price often returns to them before continuing. So let's talk about anatomy of an order block. So to mark an order block, you have to first identify, based on the definition I just gave, you have to identify the last candle before an aggressive or impulsive move to either the upside or the downside. So you mark this candle and extend it to the right on your screen. Then you wait for price to return to that zone. Then you take your trade. We'll explain that when we get to the charts. So what are the criteria for a valid or invalid order block? When you look at the candle that you highlighted before the massive or aggressive impulsive move, the aggressive impulsive move should lead to a break of structure or a change of character. The zone you've highlighted should be what? Unmitigated. There should be a gap, what we call fair value gap. And the last one is that the candle that you highlighted should close for a bullish order block. It should close below the previous candle. For a bearish order block, it should close above the previous candle. I will get there when we go on the charts. So what is the rationale for learning about order blocks? Institutions accumulate or distribute at order blocks. Accumulation and distribution are smart money concepts, but at this stage, don't worry your head about what they mean at this stage. So these zones are often aligned with supply and demand zones and liquidity pools. So order blocks, whether bullish or bearish order blocks, are often aligned, most of the time aligned, frequently aligned with supply and demand zones and liquidity pools. When price returns to an order blocks, it often provides a re-entry point for smart money to enter the trade again. So when you are able to identify order blocks, you've identified the footprints, because when the smart money enter the market, once they enter the market, they can hide their footprints. So for you as a trader, one of the things that gives you a clue that smart money has entered the market is like identify an order block, identify a valid supply and demand. But today we are talking about order block. So order blocks are high probability zones because they tend to represent real order flow, not just retail patterns. So there are areas that you must really look for on the chart. And when they exist, bro, you'll make a lot of money. So how do we trade them? We just mark the zone and wait for price to return there. Then we take our trade. So if it's a bullish order block, we take our trade at the mitigation or as soon as price touches the order block, we take our buy and put stop loss just below the order block. Then what will be our target profit or TP? Depends whether you're intraday, scalper, and what have you. So if you are intraday, you can target the next structural level. Like what we did in market structure. You can target the next structural level. But if you want to go higher and swing or hold a day for like some days, you can target the next liquidity pool or the next order block. So when you are buying from a bullish order block, then you TP at the next selling order block and vice versa. But you must combine all this with other confluences, okay? So you go to the higher time frame, as we've said, multi-time frame analysis, okay? You go to the higher time frame, you identify your order block on a higher time frame, you come to lower time frame, you look at the precise entry where you can get in the order block. And make sure that the order block you've identified is in alignment with the overall trend. So when you say you've identified a bullish order block, it must be that the market is bullish. It's not like you are. So when you see a bearish order block, you don't trade them in a bullish market because you don't want to be selling when the market is buying. It's dangerous. It's like you are going against the tide of the waves and the sea will sweep you away. So order blocks versus supply and demand. Order blocks are more refined and candle specifics, okay? Supply and demand zones tend to be broader and zone based. Both are necessary confluence that we need to trade with. However, you can find that most order blocks will sit within a supply and demand zone. We'll go through the chart briefly. So in summary, the takeaway points are that to recap, order blocks are institutional footprint. Valid order block shows impulsive move and structural break. They leave a gap and they should be unmitigated. And you can use the order blocks for precise entries on a lower time frame, your exit strategy, and confluence with other market structure, liquidity, and candlestick behavior. So assignment, you identify 2 bullish and 2 bearish order blocks on live chart. Then you indicate where you go enter, where you stop, where you put your take profit, and submit screenshot and brief annotation. So this is the end of the theoretical part of the lecture. Any questions before I go to the charts? Any questions, guys? Any questions, Reggie? Reggie, any questions for me before I go to the live chat?
No, not at all. Everything is okay.
Okay. Okay. Can you see my live chat?
I can see the live chat.
Okay, good. Okay. Okay, dokie. Okay, let's go. I have too many things on my chat and it's making the charts funny. Let me open a new Google Charts. Okay, so let me open Pepperstone. Okay. Let me hide all these indicators that at times I use. Okay. Okay, so we are looking for order blocks. And Reggie, what did I say? What did I say was order blocks? How did I define order blocks? Hi, Reginald.
Yes, Mr. Mentor. Yeah, you
Yeah.
explained other blocks as zones within the market, which often are liquidity rich sections by majorly by institutions. Why you didn't get it right?
You missed this small, but we'll get there.
Okay.
Let me remove. We've done labeling at times. I don't like moving the labeling. Okay, let me take this out. So other blocks are basically footprints of the market makers. Okay, the hedge funds, the big banks, the big corporations. When they enter the market, they leave footprints. So I started by saying that these are where institutions place trades and they expect price to return there again. So when I come to the daily time frame, this is Euro USD. You look for a chart which has already happened. Let me see. Okay, I want nice examples. These are not good examples. Just a second. I mean, gold is okay. Okay, you let me go back to gold. Even here, you see. So you let me remove all these things. Let me remove all these things. So do you agree that until this session, okay, let me remove that session. Right? That's what. Do you agree that if I give you this market, you agree that all this going up is an uptrend? Do you agree? Oh, Reggie, can you hear me? Reggie, can you hear me, please?
Yes, I can hear you. It seems to be my network is a bit rough. I don't know why, but
Okay.
I'll manage.
So the first thing you should do, I'm on daily time frame.
Yes.
We can go to a lower time frame, but let's start with daily. The
Sorry,
first thing I want you to
where
do
is
when
Philip? Philip has left.
I can't see because I'm on this screen. I can't see any who is there, who is not there. Let's continue. Let's continue. Don't worry.
I'm the only one in the class today.
Don't worry. Let's continue.
Okay.
Let's continue. Don't worry.
Okay.
So when you are looking for other blocks, because when the institutions come into the market, the institutions they have money. They have money. So when they come into the market, they don't cause this choppy movement. They cause massive, explosive movement.
Massive movement.
And we said that in identifying the order block, you look for the candle before an explosive movement. So you can see clearly here. You can see clearly here that you can say this is an order block, but this is not explosive enough. So the explosive one is this one. So you can say this is an order block.
The very long one.
Yes. So this is an order block.
Oh, okay.
You see that price returned to it, and it went back up, and it went up aggressively. You see, you can go to a lower time frame like 4 hours.
Okay.
You see, if you come here, it looks different because it's a multiple candles. So on a 4 hour, you have 6 candles coming together to form a daily candle. So it may look a little different. But normally, when you are teaching other blocks, you use daily to make it look easy. So you see, price went up explosively. Price went up explosively, and it returned to the zone before it went back up.
Mm-hmm.
Okay. So you can
Yes,
imagine
sir.
if you had entered this trade when price had just done this, instead of chasing the market, you rather come and wait here. Instead of chasing the market, you rather come and wait here and put your stop loss below the last week here. And you target based on market structure, you can target whatever. You can target 1 to 3 minimum. 1 to 3. So that's a lot of money. If you invested 100, you get $300. If you invested 1,000, you get $3,000.
Wow.
So that is order block. Order block
Sure.
are very nice things to know. At times, markets may not return to an order block immediately.
At times.
Yes, it may not return immediately, but
Okay.
later on, price will come there. So if price ignores an order block and continues and creates another zone on top, then you target that zone there at the top.
Okay.
So let me give you an
Okay.
example. It doesn't come, as we didn't come here. Then it created this explosive move. Then you look for, then this will be your new order block. This one. This one.
Oh,
So
okay.
we have something we call chains of order block. So you can see that that's another order block that price still returned to and went up. So if you mix this, if you miss the first trade, you can mark this one and wait. You see it came back to it again.
Mm-hmm.
Then it went all the way up.
Yes, it did.
So
Yes.
that's the concept of order blocks. If you master it well, bro, you don't need to change the market. Can you imagine you've come and you've seen a price, you just enter. You enter, no price start coming down and you are crying. So you're not supposed to chase the market. Wow. You're not supposed to chase the market. So let me give you another example here. If you watch here, see, there's an explosive move here. Can you see that?
Yes, a very big move.
Yes. So, and this is daily. So we mark the top and bottom of that candle. And you're waiting for price to return. So honestly speaking, I was waiting for this price to return, but it did not return. At times it does that. At times it does this thing where
but it just inches away.
Yes. So if you are a risk taker, you can enter it quickly. But at times, what I do is that I go and wait. I'll go and wait here. At times, price does this because you see, anytime price breaks a structure to either the downside or the upside, it has to go back a bit, retrace. So you see that. So at times, price breaks this structure on a downtrend. You expect that price will just come and tap into this zone, then we go up.
Mm-hmm.
But price is now testing your patience. It's testing your patience. You could have joined, you could have entered here and gone up, but know that this going up, you will be stopped here. You will be stopped here. You won't go beyond. However, if it comes into the zone, then it will go all the way up and
all the
clear
way
them.
up.
Aha. So for me, other blocks, when I see them and price does not come to the zone, I don't chase the market. I wait. There was a few pips. You can chase it. Just remember that once it goes up here, it will not go all the way up. It will come and test this supply zone here and come back down to the zone.
Come back down to hit the zone again.
And form a structure before it goes up. So this is an example of a bullish order block.
A bullish order block.
Because you identify the candle before the explosive move. So let's go through the parameters of a valid order block. Let's go through it right now. So valid order block. Order blocks, the short form is OB. The short form of order block is OB. So when you see me talking about OB, so the first is that you must identify, so one, identify an impulsive move, which is this impulsive move. Impulsive move that leaves a gap that we call fair value gap. So where is the gap? You will see that this candle went up aggressively, okay? But this candle we've marked, that is a space. And the candle came back a bit and went back up again. So there's a gap here. There's a space where there's no overlap of, there's a space here where there's no overlap of candles. Can you see it? So that is the gap. That is what we call the fair value gap. So when you are identifying, once you say there's an impulsive move, it means there's a gap. Once you say there's an impulsive move, it means there's a gap. So let's go back to what we were writing. So the first one is to identify an impulsive or explosive move that leaves a gap. And this must lead to a break of structure. Might lead to a BOS. So when you go into it, you realize that this explosive move led to a break of structure here. The last candle height was this one here. So it broke it. That's the last candle here, it broke it. So it must lead to a break of structure. Then the third reason is that the zone we've highlighted, zone should be unmitigated, meaning it should not be touched, it should be fresh. Should be unmitigated. Basically means that the zone should not be touched. It should be a fresh zone. So as you can see, the zone has not been touched. So we are waiting. Okay. And the fourth one, which is my own personal, talks about liquidity pool. Not done liquidity, so I'll not bore you too much with it. So liquidity pool, or you can say for a bullish order block, it should close below the previous candle. Below the previous candle for bullish. So for bullish OB. Then bearish OB should close above the previous candle. So these are the things that are used to look for a valid order block. So let's go over them. So for an order block to be valid, first of all, you must identify an impulsive move that leaves a gap. That's a fair value gap. So this huge movement up, leaving a gap. We'll do fair value gap as a topic later, but it's more like a crash course on it. So you see, we talk about a gap when you're talking about three candles. So the first candle is this candle in the middle here, which we've drawn as the order block. The second candle is an impulsive move. The third candle is whichever candle comes down. So you see that there's a gap here which has not been filled. So price tend to always come back to the gaps. So when you have a zone which has a gap in front of it, it's a high probable zone. It's a high probable zone. Then the second point is that it must lead to a break of structure, which it did here. It led to a break of structure. Then this zone should be fresh. It should be unmitigated. Should not be touched. Then talk about liquidity pools. The order block for a bullish one should close below the previous. This one did not. So if you want to be very honest, we'll say this one is a demand zone. It's not a typical order block because it didn't fulfill the last option. You want all the four parameters to be fulfilled before you say it's a valid order block. So this one is now, Philip is coming back. This one is now, I can say it's a demand zone. It's not a good example of an order block. So do you understand all the parameters I've gone through, Reggie?
To a large extent, yes. If I clearly
Already in a
understand.
large extent. Reggie, we
Uh,
went through all this
I'm,
year. We went through all this year. Okay, so this is a
also,
perfect example of an order block. See this one.
okay.
Do you agree? This is a perfect example of an order block. Perfect example. Why is it perfect? It's perfect because it has all the 4 parameters we just went through right now. 1, there's an explosive move.
Mm-hmm.
There's an explosive move. So if you remember what we just went through right now, let me just copy it and come and paste it here.
It hasn't been.
What's it?
I'm just reading out the indicators for a valid order book based on
Order block.
what you are showing. The order block, yeah, sorry.
Yeah, so I'm bringing it closer so you can see. So watch. This is an explosive move upwards. Okay.
Mm-hmm.
Highly
Yes.
explosive, all the way up, 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 up. So you identify the candle before the explosive move and highlight it. That's what we have done. So, and it leaves a gap. There's a lot of gaps that's left. So the first one is checked. It might lead to what? A break of structure, which it did. It broke this structure here.
Mm-hmm.
So that's 2. Second, this loan should be it should be fresh. Is it unmitigated? The zone has not been touched.
True.
4, for a bullish order block, it should close below the previous candle. This candle closed before or below this previous. This is a previous candle. It closed. So this is a perfect order block. So anytime price returns here, bro, don't sleep on it. So if I'm you, I'll open my chart and be doing the same thing on my chart. If price returns here, that's how I'm even marking it. Don't play with it. So that's a perfect example of a bullish order block. Perfect, 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 perfect. Let me see what I can find a bearish order block. Let me see. Which market is even sinking now, like dumping? I have not looked at the market plenty today. So let me see if I can find something which is dumping. All these bullish markets. All this, okay. So we find some dumping here. Good. So let me give you an example of a bullish order block. You see, this is a daily candle, so it's huge. Yeah, it's bearish order block. This is a daily candle, so it's huge. Okay. It's a daily candle. So anything you see there is huge. Okay. So let me use this as an example for you. So this is an aggressive move to the downside. So I'm considering all this as a move. All this going down as a move. So it's not just one candle. So it led to a break of structure. Do you agree?
Yes, I do.
And let's highlight that candle. That candle is this small one here. This blue one with a wick. Highlight it. So one thing you should know that behind or below every key zone, there could be liquidity. So you see the price went through it before it came down. So if I want to use this, continue. Oh, Jesus.
That's making me back.
Yeah, I'm coming. I'm closing the replay thing. Okay, I'll find it. I'll find it. Where are we? Where are we? Okay, that's it. Okay, here we are. Start new, start new, start new. Stop wasting my time. Okay. Okay. So let's say in real time, price came here. Price came here, and you mark your bearish order block. And you went through the 4. So let's go to the 4 parameters. There should be an explosive move, which you have seen that has gone down. So you highlight the candle before the explosive move. It led to a break of structure. The zone should not be touched. And this candle, because it's bearish, should close above the previous candle. Can you see it? So let me remove the blue for you to see this blue for you to see it well. This candle here, close above or before close higher than this previous candle. The parameters we did for the bullish, now we are doing for the bearish. So this an explosive move leading to a gap. There's a small gap here. If you enlarge it, you will see. There's a gap here, small gap. I don't know if you can appreciate the gap. There's a small gap using this candle. You see that to this candle, that's a gap. Can you see? It can be tiny gap. Can you see it? Can you see it?
That's very small. That's a very small gap.
It's because of the way if I enlarge the candle, it's not really that small, but it's a gap.
It's a gap.
Yes, it's a gap. Because as part of the criteria, it must leave a gap. So that is a gap. No matter, we don't care about the size of the gap. There must be a gap.
The most important thing, there must be a gap.
Aha. So that's a gap. If there was no gap, then that's not valid. Then that's not valid. Then we'll come and take this one. If that was not valid, we would have ignored this and come and pick this one. I don't know if you are getting the point I'm making.
Yeah, I'm getting it.
But this is a candle before the explosive move. So if there was no gap, I would have jumped onto this one, but there was a gap. There was a gap. So let's go back and highlight it. Okay, good. So this is the order block, and the parameters are what? One, there must be an explosive move leaving a gap, no matter how small it is. So you pick the candle before the explosive move and highlight it to the right side. This candle must be higher than the previous one. It must close higher than which it did. This zone should be all mitigated, and there should be what? A break of structure.
A breaking structure.
Yes. So now let's play. We are doing replay. Let's play and see. You see, price went there, swept liquidity above it, and it went down. So you see, this is the footprint of the institutional traders. They left their footprint, and they always return there again to sell again. So that's the logic. The logic is that they enter the market and move price aggressively down. So retail traders will think, oh, that thing is crashing, let's all join. They will join. Some may even join even here. As soon as you join, price will start going back. Now you don't understand what is happening. The price comes here again. But those of you who have been taught other blocks, if you see this, you are waiting for price to come back here. And look at how far it sold downwards. Look at it. How far it sold down. More than even this. That is institutions at play.
Manipulating.
So that is a bearish order block. That is a bearish order block. So I don't know if let me pause for any questions on, because I've gone through bullish and bearish order block. Do you have any questions for me?
No, not at all.
Okay, I'll stop sharing. Now you Reggie, you have everything right to share. Now share your screen and mark other blocks for me to see.
I'm coming.
Philip went out again.
Yeah, Philip is gone out. So I should choose
ask him to join again.
I should choose any currency pair.
Any currency pair. It can be any pair.
Please, can you see my screen?
Yes, I can see your screen.
Okay.
So you can go to day, you can go to 4 hours, you can go to 1 hour, you can go to any time frame.
Okay. This is 4 hours.
Okay.
So we'll start with the bullish first, yes.
Whatever you start with, I did for you, bro.
Okay, so
So this one is going down. So look for bearish.
this one is going down. Yeah, okay.
So once it's going down, it's a downtrend. So you look for what? Bearish order block.
For bearish, yes. So I'm looking at
your screen. You've made your screen so tiny.
So I'm looking at this one here. I'm looking at this
Whatever
one here.
you are thinking about, you mark it. You mark it.
Okay.
There's nothing wrong or everything is correct.
So this one here.
So you are supposed to mark just one candle.
One candle.
And your red, lighten it up a bit. It's too dark.
Okay, let me lighten that.
Like it's too deep in. Let me put it away.
This way.
Yeah, so highlight just one candle. Don't highlight multiple candles for now.
Okay.
So the candle before the explosive move. So mark that candle well. You can enlarge your screen so that you can see the candle's edges very well. Yes, Philip, I'm admitting him. It's taking forever for him to join. What is happening to the chat? Or his internet is terrible?
I should think so.
So make sure you highlight like the whole body, wick to wick or whatever of that candle and extend it to the right side. Okay.
This one here.
Are you sure it's covered all the way? Look at there's some space below, or is my eyes?
Okay. The box is able to split correctly.
You can hear me clearly, right?
Yeah, I can hear you clearly. I can hear you clearly.
So I don't know why.
I don't know whether generally there has been bad internet. It's just this evening is a bit stable. Throughout the day, my internet has really been a bit back and forth, back and forth. Please, can you see?
Highlight it to the way we did it. Highlight it to the right.
Okay. Oh man, it's not on. What's the name of the word? Unmitigated. It's been mitigated.
No, don't say it's been mitigated. By the time you were drawing it, all these candles on your right have not been formed.
Have not been formed. Okay.
Because now price has gone long time. So what we are doing is like we are going back.
We are going back. Okay. So I'm looking at this due to this one and that one. The two large ones after the small one here.
Yes. So it's just unfortunate that price is reversing. So you can see that it reacted and came down a bit and went up.
Yes.
So price was reversing, so it didn't work.
Okay.
So you pick this order block when price was almost reversing. And it can happen at times. You pick other blocks and price reverses.
Okay.
So this example you have picked is not wrong. It's just that price is reversing. So
price is reversing. Okay.
When the big green candle got there, it rejected a little. Then it formed a doji.
Yes.
Then followed by red candle before it went
up again. I went up again. True.
So maybe we should look for another bearish, but you are getting it. So we can even go through the parameters here. Let's go to the parameters. Before you go, let's go to the parameters.
Okay. But I think a favorable one might be this one here.
Yes, I've seen the one towards your left.
This one. I'm coming.
You can forget about this one. Leave it alone. You don't need to clean it. Just leave it.
I'm just trying to move it. This one here.
Yes, it's correct.
This one here.
But highlight the candle well. It's correct.
Okay, I'm highlighting it. I want to make it bigger. This one.
Yes, I can see it. Highlight it well.
Okay.
I think Philip's internet is terrible.
God help us, all of us to get Starlink. So I'm looking at this one here.
Yes, so you've stretched the chart too much, so it's making it look funny.
Okay. Is this okay?
No, not that one. Pick the candle before that one. In fact, delete it and redo it because I can't see it well. Delete it.
Okay.
So pick the green candle, the small one.
Can you see it now?
Yes, but pick the green one. That is the order block. It's not the red one.
Okay.
So you can now enlarge it and stretch it to the right.
Okay.
So the reason why we are going through this is so that you get a hand of it. It's not anything complicated, but it's something you must do.
Okay, sir.
So you
I
can
want to find
extend
out
it.
if.
So you can extend it.
Okay. I should keep on extending it.
Extend it to where it's touching it. Yes, where so that's fine. Now let's go through the parameters. So tell me what you see. That's why you have done that.
Okay, first I see a very large movement in the downtrend section. That's the first instance. Secondly, if I should close it a bit, you realize that it is unmitigated.
Okay.
That's secondly. Thirdly, what's the third one?
You forgot that you led to a break of structure.
It led to a break of structure here.
Yes.
Here. So this means there's a break of structure here.
Yes.
Here.
Yes, I agree.
Yeah, it's a break of structure. I think the third one, then I think there are 4 parameters. Can you help me with the last one?
Okay, so let's start over again.
Okay.
So the first one is that there's an impulsive move.
Impulsive move, okay, that's the first one.
Leaving a gap. Okay.
A gap. Leaving a gap.
So I'm going to say it in a way that will help you remember. There should be an impulsive move that leads to a gap.
Okay.
Then this explosive move or impulsive move should lead to what? A break of structure.
A break of structure. Okay, this one here.
Yeah. So when you say like that, so explosive move leading to a break of structure, that's already 2 points.
That's 2 points, yes.
Then the third one is that the zone should be unmitigated. As it should not be touched. It should be fresh. So you realize that all the down movement he made, or it never came back until when he came back to the zone and moved down again.
Exactly.
So the last one is that the candle, that is the order block, should close above
the previous candle. Yes, it should close above the previous candle.
Or there should be a liquidity pool there. So that time it closes about the same level, price will wake into the zone before it comes down. So if you watch, there's another candle close to it, right? They are almost at the same level at the top.
It is red, but it's like the wick are almost at the same level.
That is why liquidity pool, that's why it wicked through it.
That's why this one here
went through before it came down. That's why that candle wicked through it.
Okay.
Instead of it touching the zone and just going down, because there's liquidity. Anytime there's any candle anywhere that they are like about equal, like double top, price will go above them before it goes down.
Okay, so it's not like a sweet spot that we like to actually go and test.
Yes, it's a sweep. Yes, you are right. It's a sweep.
Okay.
So that is why, as part of the parameters, I talk about liquidity pools.
Okay. Wow.
So now that you yourself we are going through the parameters and you are actually practicing it, it's making more sense.
Makes more sense. True. I think
when we are done with this lecture, you just pick the chart, you identify a downtrend. and you look for bearish order blocks on a downtrend. So when you are going up, you look for bullish order blocks. So you can rewatch the video, look at the parameters, and use it to guide you.
Nice.
I don't know why Philip is not able to join. I think his internet is terrible. I don't know why. I keep admitting him, but he runs, he just does circle thing and goes off.
I'm sure the internet that is misbehaving.
That's why I was asking you whether you could hear me. If you are hearing me, it's not from here.
I can hear you perfectly. I can hear you. No issues here at all. No issues.
So now you see how bearish order block, bullish order block. So you see all this initial down movement was doing, or you will not be interested.
Sure.
You just have to wait. Just have to wait.
That's a very large downtrend.
You have to just wait or look for another pair and trade. That's all.
Okay.
So you don't have to set alerts, right?
No. I think you showed us, but I hadn't practiced it to see.
So bring your mouse to the beginning of the order block, the below one, the lower part of the order block.
The lower part. Okay, this place.
Right click and let me see. No. Come a little below it.
Okay.
So you right click. That's fine. You right click.
Okay, done.
You see add alerts. I think that's it.
Add alert. Okay.
Function.
Yes,
you can click on it. And to tell you to create, then click on create.
Pardon?
Click on create down there.
Okay.
Cancel and create. So you see that alert has been set. So you can even put the mouse on it or your cursor and move it to any level you want to move it to.
Okay.
So you can move the alert a little closer to even the zone. That's all. So price in the zone, the machine will alert you. Your device will alert you.
That's fine. That's very, very fine. Yeah.
So now that you have done, have we done bullish order block? Have you looked for a bullish order block? You haven't.
Okay. That's fine.
Go to gold. There's a nice order block there on gold right now. Let me show you.
On gold, okay. That's right.
XAUSD, not PAX. XAUSD.
Okay,
PAX is a crypto version of gold.
So this.
Yeah, you can choose any of them. Okay, go to like 15 minutes or 1 hour.
15 minutes or 1 hour. Okay,
yeah, but let's go to current price. Price is hiding. Don't know why it's hiding. Okay. Oh, wow.
So this 15 minutes.
So I want to see the end of the candle. It's hiding. The current action is hiding.
This?
Yes, better. So enlarge your screen a little. It's too squashed.
Is this okay?
No, like stretch it a little. It's too thin. What's squashing on the door? No, come. Good. Now use the things I've taught you.
Okay.
You have seen explosive move going up. So indicate your order block or bullish order block. Let me see.
Bullish order block.
If the candle before the explosive move, it is obvious. We can see it.
This one here.
Yeah, the green one.
No, this one.
Yeah, the green one before the up greens. The first green down. No, not that one.
Yeah, I'm trying to. Not that one.
Not that one. The one below.
Can't
you see there are explosive candles, green going up plenty? Not the one where you are there is just small.
This one,
yes. Yes.
Okay.
So extend it to the right. Don't you see that? You click outside for the marks to disappear. Just click outside. See that price return to it and it's going up. This is a live chart.
Yes. There's a tip of the red one. Okay.
Right now.
Okay.
Let's go through the parameters right now. Let's start. One.
Okay. Yeah. Number one. What's the name? An impulsive move, impulsive upward trend, which
led to a break of structure.
Led to a break of structure. It led to a break of structure.
True.
Yes.
The zone was unmitigated until now it has mitigated. So the zone was unmitigated.
That's true.
And the green candle closed below the previous candle. That's valid order block.
Yeah, that's true.
Price just came to tap it with this live chart gold. Price came to tap it with it's going up.
It's going up, yes.
So if we have seen this earlier, you could have entered.
Entered the trade.
Yeah. But we're busy teaching.
Goodness. I see. Interesting.
See, we've missed the opportunity. We've missed it.
We've missed an opportunity.
The second one you were trying to mark, that one has not led to any break of structure.
That's true. This one here.
So always use the criteria.
The criterion. So it means that all four must be satisfied. If even one is not satisfied, it doesn't qualify.
Not a valid order block. Yes.
Okay, that's fine.
So if it's not an order block, then it's a demand zone.
It's a demand zone. Okay.
So I think now you should have a better understanding of order blocks. Very
yes, I think I'll do more.
Again.
I'll practice it and then drop what I come across on the page or send them personally to you for evaluation. Yes. But the assignment I dropped, I didn't get any feedback.
So earlier on, I was talking to you on the side. That's why I didn't feel like I should talk again.
Okay.
So we were talking on the side.
Okay.
But don't worry, I'll go to the platform and write something. I'll go and write something.
Okay. That's fine. That's fair. Okay, now I'll do a lot of practice this evening. And share my
They look simple, oh. They look simple, but if you follow it well, bro, it's enough to make money, oh.
That's true. You have to get a hang around it. And you have been in it for a very long time, so they're like playthings for you.
Yeah, but there are even at times I don't see them because either you come to the chat, your mind is somewhere else, or you are being distracted. It happens. So the best place to trade is to be alone in your room. When I'm trading at times, my wife will come and ask me something, or my kids will come and ask something. They are always disturbing me over something.
Always distracting me.
The first lecture we even did, somebody came to the room. So I'm just waiting. After a while, I'll create my own office somewhere. And when I enter that office, nobody should come there. When you are trading, you need to focus. You need to focus.
A lot of focus.
It's a business, so you need attention.
That's true.
If you are trading and you want to be playing around, then what was it?
God have mercy.
So gradually, you see that you are seeing like the chart is making sense.
Now
it's not like you are looking at men appear like trees. That's it. Like you can make sense of something.
Exactly.
Yeah. So let's practice on this one. It's a shame you were only 1 year. Now you are going to enjoy all this. So it's okay. At times, when people don't come, it's a blessing for those who come. So right now, you cannot enter this trade. But if you have a demo account, you can risk it. What your demo account is what? $100. What is it? Your demo?
I think 10,000.
That's good. So don't enter now. I don't want to do more than 10,000. It's a demo account, but today is the last day of the demo. As I enter. But it's a bad behavior. It's a bad behavior. Ideally, you should enter at the zone.
Okay.
So you leave it alone. When price goes and leave you, let price go. When price leaves you, let it go.
Okay. Sure.
Don't chase price. Price. If it will come back, if it comes back again, fine. If not, let it go. And if you can't find any other pair to trade, close your PC and go and sleep. It's not by force to trade every day. If the market is not moving well, bro, forget about the charts and go and sleep. So I thank you for joining tonight's lecture. You are the only one, and I think you have benefited a lot. The rest will kill to have this one-on-one session. You know, at Diamond FX, we charge $1,000 for one-on-one session for 3 months.
Ish. That's a lot.
Like just me and you, or you and Commander Wise, $1,000 3 months.
Ish.
And that one you have 2 lectures in a week.
Ish.
That one is live. So that one you wouldn't have missed this lecture. This gold. The gold chat will be open whilst you are talking. Then he will tell you enter gold. Then as you are talking, you are making money. That one is a different level.
A different level. So by the time the 3 months is started,
that $1,000 you pay, you make it back in a week or 2.
Charlie.
Because if you have paid $1,000, it means you have like $5,000 or $10,000. And if you have $5,000 account, your lot size of one lot size, yes, if you make 10 pips, that's $100. If you make 100 pips, that's $1,000 already back. And $100 on gold for us at Diamond FS is not a big deal. So if you enter one lot size, just 100 pips. 100 pips means that you are moving from, let me give you a value. So right now that gold is around 4,000. If gold gets to 4010, that's 100 pips.
Okay, 4010.
That's 100 pips.
Charlie.
So getting that on a one lot size is $1,000. Easy.
The number of you are printing money like no man's business.
Charlie, but if you don't have a big lot size, one lot, I will not allow you to do one lot size.
Okay.
If you have $1,000 account, the highest lot size I'll let you enter will be 0.05. And I'll explain to you when we do risk management.
Okay.
The bigger the account, the smaller your lot size. So I think we've done order block. I hope you practice and get better understanding. Then we'll build upon it with demand and supply zone next week.
Okay.
So even with this, you can start looking at BTC or the crypto pairs on SNES, Binance. You can start drawing them, mapping out your demand and supply, your order blocks, and see how many times price returns there.
Okay, that's fine.
Okay, Reggie, any last comment before I close?
No, not that. I think what I have to do is to practice, and then send the results of what I've done to you. And then I see how best I'm getting along with everything you've taught so far.
Okay. I'm happy to hear that.
Sure.
So you can stop sharing your screen.
Okay. Thank you very much.
My pleasure. So I'm bringing the class to a close.
Sure.
I'll be expecting that you send your assignments. Now